Hey guys, Zaman
And Christina
from Our Rich Journey. It is the end of November and it is time to go back into our investment portfolio and show you how regular investors invest for financial independence. This month has been an amazing month. The stock market has hit all-time highs once again. The Dow Jones hit over 30,000. I mean, it has been an amazing month. And many of you are probably at home wondering, what is there still left to invest in where I can still get a deal? Because it seems like everything is so high. Well, on today's video, we are going to talk about this specific question. But we're going to approach it from the point of value investing. That is the subject of this month's question.
So like Aman said, in today's video, we're going to talk about value investing, and we're going to open up our portfolio and show you how our portfolio has been performing. Now, if you're new to our channel is all about making money, saving money, and investing money on the road to financial independence. So if you like investing videos like these, make sure you subscribe to our channel.
Now, if you've been keeping up with this stock series, you know that we initially started when we invested $5,000 into the stock market back in March of 2020, when the stock market was crashing. And every month after that, we have invested another $1,200. And as a part of this series, we always answer a question about investing. And so on today's video, we're going to talk about value investing, but we are going to focus on a particular area or particular sector of the stock market where we think value may be. Now, it's up for debate, and that's what this video is going to dive into, but we are going to be talking about the airline sector.
So if you don't know about value investing is a strategy that involves picking stocks that appear to be less than their intrinsic value or their book value. Now we're going to be talking about airlines or the airline sector, because even though there was a crash in March of 2020 and the stock market is now at an all-time high, the airline sector has not fully recovered and they are not matching those all-time highs right now.
So value investors are actively looking at the stock market for undervalued investments. They are going against the herd. If everyone is investing in one sector, they are looking for the sector that people are overlooking and they believe are undervalued based off of financial analysis. So one of the things you notice that we say is sector. We don't say individual stocks because for us, our strategy is to invest with index funds or ETFs that track an entire index or sector. And in this case, when we're talking about investing in the airline sector, we're talking about one ETF. In fact, it's one of the only ETFs that invests in the airline sector, and it's called JETS.
So you may be asking, why aren't we talking about individual airline stocks? And for us, the reason is because individual stocks are too risky. But then you put on individual airline stocks into it, that's even riskier considering the circumstances. Now, if you invest in a sector ETF will take all of the companies and put that into one single investment. So ETFs like JETS, for example, they're going to invest in all of the airlines all together into one investment. So if one particular airline fails, you have all of the other airlines in this ETF that can do well and that can result in increased value for your portfolio. Now, we're not saying that a sector ETF is without risk. Everything involves risk when you're investing, but we think a sector ETF for airlines is safer than investing in individual airline stocks.
Now, I really want to just drive this point home because when you invest in an index fund or an ETF, you are spreading your risk across many more companies than investing in one individual company. If that one company fails, you lose all your money. What would have to happen for you to lose all your money with an ETF or index fund is all of the companies within that ETF or index fund would have to fail. And the likelihood of that happening is very, very low.
So let's get back to the JETS ETF and let's talk about numbers to really determine whether or not it's good for value investing. So JETS is an ETF that tracks the performance of airline companies across the globe with an emphasis on domestic passenger airlines. And the ETF invests in about 40 companies, but its top 10 holdings make up over 60% of the ETF. So the top 10 holdings include Southwest Airlines, Delta Airlines, United Airlines Holdings, American Airlines Group, Allegiant Travel, Cargojet Inc., JetBlue Airways, Alaska Air Group, Air Transport Services Group, and SkyWest. So in addition to looking at the holdings in an ETF, you also want to be aware of the expense ratio because that involves the cost of owning this ETF. And for JETS, the expense ratio is 0.60. Now this can be a little high compared to other ETFs, but it's pretty much on par with other peer products in this space. So the JETS ETF also pays a dividend, and that is about 2%. Now the other thing we want to talk about are the actual numbers because I'm sure you guys are super interested in that. Now JETS took a huge hit in March of 2020 and had a 50% drop. And since then, up until today, it's been pretty volatile. It's been going up and down and up and down. And as of today, it's recovered about halfway from its original 50% drop in March. So there's still some potential room for growth. So what we want to do now is we want to get into the value investing analysis. We want to talk about the JETS ETF and whether it would be a good long-term hold. So we're going to start off this analysis by going through the pros and cons of owning this JETS ETF. And we're going to start off with the first pro, and that is that it is relatively cheap. It's much cheaper right now compared to what it was right before it crashed in March of 2020.
But don't think because something is cheap that it's necessarily a good investment. But from this standpoint, we're saying that it is a pro. The next pro is that you're starting to see the airline industry recover. People are starting to go back to traveling, and there's a little bit more optimism on the horizon when it comes to this industry. Because a lot of the reasons why the airline industry was falling was because people weren't flying, and the attitude or the outlook, the perception was that the airline industry would not be able to recover. The next pro about investing in the airline industry is that the airline industry is resilient. They find a way not to fail. They cut costs, they consolidate, they'll even go after a government bailout. They will figure out a way to carry on.
And they carry on because in this day and age, people typically see airline travel as a necessity. And so if you're investing in a sector that is a necessity, it's very difficult to have that necessity fail. So those are our pros. And if you look at our pros, you'll notice that a lot of them have to deal with the idea that investors are speculating that the airline industry will grow and become more profitable. So that's a lot of speculation. So let's talk about some of the cons.
Oh, am I excited to talk about the cons. Not that I'm a negative person, but this is where the rubber meets the road for value investors. Because at this point, this is when you really start to look at the financial situation of these airlines and the cons really shine through.
So the first con is their financials. Their financials are pretty terrible. They have a lot of debt. They're not very profitable, and they are very prone to bankruptcy.
And based on what's going on today, these airlines are going to go into more debt. They are going to have to pay back a lot of the loans that they are taking on right now just to sustain themselves. So although there might be more optimism on the horizon, there's also going to be a lot of debt that's going to come due for these airlines on the horizon. The next con flies in the face of one of the pros that we made. And it is that even though you see vaccines being developed and some optimism about what the future holds, it may still take time for people to feel comfortable flying again. And until people feel absolutely comfortable, the airlines will not reach the peaks that they were at. So if they can't even reach the peaks that they were at, how will they continue to grow? The major con is that it may take a long time for the airlines to fully recover. The next con is that airlines will continue to be vulnerable to so many factors. Things like pandemics, terrorist attacks, higher fuel costs. There are so many factors that influence the performance of airlines that it just makes the industry a very risky industry to get involved in.
And the last con is there are other sectors to invest in that are not as risky. Now, of course, we're talking about value investing, which is going to involve some risk. But if you're looking for an investment that is not as risky, there are other sector ETFs that you can get invested in. So those are the pros and cons for investing in the JETS ETF. Now, we are not telling you what to do. We're not telling you to invest in it or not to invest in it. What we really wanted to do was introduce you to the idea of value investing to see if that may play a role in diversifying your portfolio and helping for more growth opportunity with your portfolio.
So with that said, let's get into our stock portfolio performance.
So let's start off with the first index fund, which is the Fidelity Zero Total Market Index Fund, FZROX. On November 16th, we invested $720 and bought 55.470 shares at $12.98 each. We now own a total of 860.480 shares at an average price of $10.19 per share. Our total amount invested is $8,770.16. The current value as of November 26th is $11,272.28, making this a total gain of $2,502.13 or 28.53%. Our next investment is Fidelity Zero International Index Fund, FZILX. On November 16th, we invested $240 and bought 22.059 shares at $10.88 each. We now own a total of 330.571 shares at an average price of $8.83 per share. Our total amount invested is $2,920. The current value as of November 26th is $3,666.03, making this a total gain of $746.03 or 25.55%. Our last investment is Fidelity Real Estate Index Fund, FSRNX. On November 16th, we invested $240 and bought 16.173 shares at $14.84 each. We now own a total of 234.804 shares at an average price of $12.56 per share. Our total amount invested is $2,949.71. The current value as of November 26 is $3,449.27, making this a total gain of $499.56 or 16.94%. Overall, our portfolio as of November 26 is valued at $18,387.58. That's up $3,747.70 or 25.6%.
So that is our stock portfolio update for November 2020. We are so happy with the performance of this portfolio and seeing it grow. We are almost to $20,000. If you guys like this series and if you have more questions about investing, please leave them in the comment section below. We love receiving your questions. And as usual, if you like this video, give it a thumbs up, subscribe to the channel, and join the journey.